Hey everybody, before we get going on today's market outlook, just want to remind you about the AgView Executive Business Conference in Phoenix, Arizona, January 21st through the 24th. I know a lot of you are already signed up. We do have a few slots open yet, and we've left the registration open just to fill up those last few slots. And so if you've been on the fence or been thinking about, man, maybe I should go there, or maybe I missed it, there's still a few slots open yet. There's not a lot. So if you are thinking you want to go, and you can get a way to do that, this will be an opportunity to, do some things for your bottom line, network with some awesome people. And we've got, an outstanding group of educators there. So if you can make it, or if you have any questions about that, just give Alyssa or myself a call, and I hope to see you in Phoenix. And I know we'll see a lot of you there. Also with today's discussion, it was kind of a long one. So make sure you get all the way to the end. Some really good conversations that Pete and I have towards the end of the conversation. So with that said, hope you have a great week ahead. And with that said, enjoy today's market outlook. Welcome, everybody, to another episode of the AgView Pitch. We're heading into a new marketing week, the first week of December. It's the last month of the year, and lots of stuff going on so far, and a lot of things to look forward to. And we have with us today Pete Meyer. Pete, how's it going?
Good, Chris. Thank you very much. I hope everybody had a nice Thanksgiving. And yeah, there's a lot going on and nothing going on at the same time. So it's kind of a difficult situation, I think, at the moment. But
yeah, it's pretty crazy. I think that, when I was thinking about this, I'm like, you're the guy that always, when I was deciding, okay, who do I want to get on this week? And I'm thinking, Pete's the guy who always knows how to figure out what the hell is going on with reports and those types of things. And then here we are with the lack of them. And so I got to thinking, well, actually, that's probably why I want to talk to you, because we did get a little information. We've been sort of flying in the dark. Talk a little bit about some of the things that and from your experience, because you've seen shutdowns before, you've been through this before, you've got a lot of experience. What should farmers be doing? Let's start there and thinking about as we get into December, and might we see something in December, or we're going to have to wait for January for any kind of information?
Well, I mean, I think there's a possibility of something going on here the first couple of weeks of December, but then after that, once we get into the third week, I think it slows down. And the reason I say that there might be something going on in December is that we've seen this before, where the USDA on export sales. Let's first talk about the USDA on export sales. So the export sales reports, we get flash sales all the time of 100,000 metric tons or more, and they, right before the WASDE, when was the WASDE? 2 weeks ago now already, I guess coming up on 2 weeks ago. Well, it was on a Friday, but anyway, regardless, they released all the flash sales that occurred during the shutdown. However, they also said that we will not be totally caught up with export sales reporting until probably mid-December. So, people are out there saying, well, if China is going to buy, they're going to buy over the threshold, and we would have seen it in the sales, in the flash sales data dump. Not necessarily. In the flash sales data dump, there are about 900,000 metric tons that were bought by China or unknown. Secretary Percent obviously has put this 12 million ton number out there by the end of the year. If they're going to buy 12 million tons, you're going to see some action here in December on the flash sales and stuff like that. But the soybean market had a good run there, and now it's just kind of disappointing again. We're trading down around 11.15, 11.10, something like that. Basis Jan futures. So we are going to get some data dumps there, but it's just so difficult. And looking back on the WASDE, it was pretty clear to me that the World Board just kind of mailed it in, right? This report was totally run by the production side, which is NAS, and whatever changes they made in production, they just made changes to the demand side. They lowered soybean exports, which was, I think, surprising to everybody, thinking that this China deal would add some exports there, but they didn't. They lowered soybean exports. So it's interesting there. And then on the other side, you have the CFTC with the Commitment of Traders report. That's another one that the CFTC, it's my impression or my understanding that there were people from the USDA that went to work during the shutdown. They just did, whether it was at the lab in St. Louis to process the objective yield plot data, or people behind the scenes just working. I've heard numerous stories of people working behind the scenes even though they weren't supposed to. I think that speaks, pretty highly of those people. But as far as the CFTC was concerned, the CFTC just never went to work. And now that comment is that they're going to release the commitment of traders report, which is, might be interesting. I mean, the market is long bean, short corn. We've seen that, but they're going to release that in twice a week in tranches, and that also will not be up to date until the end of January. So, moving forward here in December, we are going to see flash sales. If Besant and Trump are going to pull the rabbit out of the hat and get China to buy 12 million tons, which seems highly unlikely at the moment, that's going to have to happen here. They weren't talking about a marketing year; they were talking about a calendar year. Mm-hmm. So, got a lot of moving parts, I think, in the first couple weeks of December. So we might see something, but over on Friday as well, Chris. On Friday, on Tuesday or Wednesday, it was announced that Seth Meyer, who's the chief economist and the runs the World Board, which is part of the WASDE. You have the World Board on the demand side, and you have NAST on the supply side, for lack of a better term. He's resigning. And he's going to go to University of Missouri FAPRI to run FAPRI after Pat resigned, or Pat retired, I guess. And, I've had some conversations with Seth, and we don't agree on stuff all the time. Then again, before my current job, I made a living, kind of trying to disprove or trying to find holes in what the USDA was thinking. But the fact that he's leaving, that's a big loss for the USDA, because there was a pretty good rudder on that ship, and now we're rudderless. The CFTC is rudderless as well. The CFTC has one commissioner. They have a proposed chairman now that they're going to try to push through the Senate here within the next 30 days or so. But, this just speaks to the overall uncertainty in the markets. Granted, it may not impact us on a day-to-day basis, but when you lose the chief economist of the World Board, the sitting commissioner, Ms. Pham, who is the only sitting commissioner at CFTC, is going to resign as soon as the new chairman comes on board. You're supposed to have 5 commissioners. You have 1 at the moment. It just speaks to, a lot of stuff behind the scenes that may not make an impact on a day-to-day basis, but it really worries me, And speaking of FAPRI, I saw it at the Ag Web or Farm Journal runs a survey of economists, of which I participate, and the results came out for December, and 71% of the economist survey says thinks that row crops are in a recession. Okay, so that on its own, I wasn't really sure. I voted no, but 71% of the economists said yeah, it is, and then 69% of the economists said it's either going to, a year from now, it'll either be the same or worse off than it is now. So my point here, and I think it's going to be the same, maybe slightly worse off. It really depends on your input prices and that sort of stuff. But at the end of the day, this is the problems we face every day when we look at the market. You asked about what people should be looking at in the market in December. This is a longer term where we have just so much uncertainty at the USDA, so much uncertainty at the CFTC. The CFTC may not matter to the average farmer, but it matters to us as traders, as hedgers, because we like to know, what the positions are and how people are thinking, and then you have an overriding kind of black cloud over the market. I hope the economists are wrong. I hope I'm wrong. I hope that it's better off next year. But 70% think that that the row crops are in a recession, and like I said, 69% or 68%, something like that, don't see it getting any better.
Well, I would argue, as a one who looks at, and I know you and Jared, you guys see a lot of this too, but I know one of the things that I've noticed now doing Profit Manager, just kind of wrapping up 25. The problem is there's a ton of stuff not sold yet. So there's, and that's
Right.
another topic we'll hit on here in a minute. But, when you look at where this year is going to shake out for the pure crop operations, in other words, the ones that do not have other profit centers or that are carrying some debt, which more farms are carrying more debt now than I've seen in a couple of decades. And I would say, from our observation, at least from what I'm seeing, and we have a lot of excellent clients that make really good decisions and are very solid. But we've been burning a ton of working capital. And so what's happened is, they've got equity, but they don't have cash flow. And last year they had a cash flow crunch. The year before, a bit of one. We're on year 3 of this continuing. And so one of the things I wanted to say real quick and get your take on it, I was just thinking of it when you were talking there about, are we in a recession or not on the ag sector? But Shay put a questionnaire out on X, and I know some of you that listen here probably saw it, but it said, farmers and ag service, do an honest gut check. I can't talk. Farmers and ag service, do an honest gut check assessment. How is your mental health and well-being? And this is a different sector, but it's interesting. He laid it out one to 2 on a scale from 1 to 10. So that'd be the worst, worst ever, very bad, 6%. 6% of the respondents said it was the worst ever. He said 3 to 5. He called that not great, getting by, 36%. So that's a pretty high percentage, just under 5, and this is, mental health and financial health are 2 different things, because you can be really down and still have decent financial standing. But I just thought that was interesting. And then 5 to 7, good, all things considered. In other words, they're treading water, in November, I know they talked about the ship over the lake. What was that? The Edmund Fitzgerald,
Right.
holding our own, all of a sudden it wasn't so good. But, good, all things considered, was 52%. And then 8 to 10, awesome, best ever, 6%. So the same percentage is doing great. But in our observation, and to carry this a little bit further, I bet you $1,000 if you pulled out those the ones that are 8 and 10, those are operations that have other profit centers besides just row crop stuff.
Has to be, right? Either that
or they don't have any debt at all.
Right. Or sold, or absolutely sold a high,
and
whatever. But, you had a good point there between financial health and mental health, right? I mean, but,
Right.
we have a farmer who actually is near your area who has passed away, and we couldn't quite figure out what that was. And his financial health was very good, but obviously there's something else was eating him. And it's a shame. And I also noticed the other day that, even though, it's such a morbid statistic, but I guess that farmer suicides in Iowa are the highest they've been since, I don't know, 2010 or 2011 or something.
And we're far from the 80s, and there's a lot of different things going on.
Yeah, I don't see the 80s being a repeater.
Yeah, this is different because there's equity. People are sitting there, in most cases, high percentage of cases, are sitting there with a strong financial debt to asset ratio, which was what was absent in the 80s, and then compounding that with extremely high interest rates. So those are the 2 factors that sunk those ships. Now what we're seeing, though, is just this massive burn rate, and it's the fastest burn rate I've seen. And I started doing this in 1996 and keeping track of a lot of pretty detailed numbers on cost of production, and this is the worst I've seen since then. It's crazy how fast the inflation almost single-handedly impacted it. When you look across the board, and it really started with COVID when we started seeing all the money come in, that's when the inflation took off. We brought in all of the increased prices, and then they've stuck. And so,
yeah, these handouts don't. I've made the case before, probably with you, but I know at least with Joe Vaklovic that when the first MFP program came out under Trump, that was the beginning of the agriculture inflation cycle, right? Okay, nobody could have foreseen extra money coming from COVID and the rest of it, but You actually sent me a clip of I don't know if it was I was talking to you guys or talking to Joe about the fact that this cycle is just it's impossible to break, and the input suppliers and the equipment guys are not your friends. They're chasing high valuations based on the stock market. The stock market's trading at 6,800, 6,850, something like that, basis the S&P. The thought process is that they're going to try to pump this up. They're going to try to get a Santa Claus rally, so everybody will get their bonuses, get the S&P to 7,000, which is not that far from where we are now. But my point is that with such a high stock market valuation, the publicly traded companies that service agriculture, also have the only way that they can become attractive to investors and keep their stock price on pace with everybody else that's in the market is to keep prices high. Mm-hmm. So I don't know what breaks that. And then if we do get a direct payment here that Secretary Rollins is talking about, by and large, I think that most people out there would agree with what you and I are saying, and that the inflation cycle really started the first time with the quote unquote free money, right? There is no such thing as free money. And now it's going to come in, even if they hand out $10 billion, it's primarily going to go to the bank and to your input suppliers and everything. It's really not going to help the financial health of the farmer directly.
Yeah, I always used to say that, whenever we kind of did the math on that, the farmer kept about 30% of the money that would come through some sort of an ad hoc payment. The consistent ones are already built in, and you keep a significant less percentage of that because that's built in. The landowners, like you said, the equipment manufacturers, seed, chem, for all of the other supply systems have that built in. But when you get these ad hoc, that's when you get a shift or you get these increases. And it used to be, we kept about 30% of it, but and we can't get it dialed in that close, but it looks to me like it's probably less than 20% of it we're keeping now, so it feels good. It's like a sugar high when you get it, but then it goes away pretty fast, so it helps short term, but it's not the solution for a long-term issue is part of the problem.
No. And and that's the thing is that people have asked, Joe Vakovic asked the secretary when she was on with him, is this the new norm? And our handouts the new norm. Sooner or later it has to break, right? But it's interesting that you talk about the 30% because last June I looked on the St. Louis Fed and there were about $80 billion in ag loans just in the hands of the commercial banks, and at 8%, that's $6.4 billion. So I made the argument that even though the government handed out $10 billion, that go around in the over the winter of last year, spring of this year, 80% of that, because the average operating loan at 8%, 80% of it went to the banks. So I'm sorry, not 80% of it, but 64%. The debt. The interest rate on that debt was $6.4 billion. So out of the $10 billion, $6.4 billion went, and then $3.6 billion went someplace else. To your point, it's interesting. It's right around that 30% level.
Yeah, we've measured it a number of times. It just seems like it's even increasing now. So, I want to roll back to something you said a little bit ago. Is that and get back to some practical stuff here for a few minutes in terms of the farmer decision making and a couple things. And you made the comment that the only news we might get here for a week or two as we look ahead in the next couple of weeks and think about and look at our year ends and look at what do we need for cash flow and what do we need to prepay and all that kind of stuff. If the soybeans, if we do continue to get some flash sales and that gives us some strength, do you think that's going to pull any of the other commodities along, or is it going to be a bean thing? Or do you think corn, wheat, cotton, any of the commodities have any hope at all? Or is it more corn connected?
So I've been labeled the $12 soybean bull because I've said previously publicly that, when China enters the market, there was a chance for us to get to prompt beans up to 12. So, and I still think so, but I think it seems to be a little bit far fetched now because I just don't see these 12 million metric tons being sold to China. If they are, even if we sell 6, there's
And you're
probably a chance
talking
to get
old crop or new crop?
old crop.
Okay.
So,
We'll get to crop in a minute, but
right, we'll see how that goes. But the problem I have there is that based on a 2.5 divisor, that would put corn at like 480, and I just don't see corn going to 480. So while I do see beans, the possibility of 11.75, maybe $12 on a knee jerk, I'm not so sure we can get corn up to 480. I think that you know it could be close, but when you start to look at 460, I mean, we're trading what basis? Now we're trading pretty much trading March futures as we roll the calendar to December on Monday. 446 ish, something like that. I mean, we still have D's corn. D's corn's down to 433. I mean, maybe 450, so 460. Maybe you can get it to 465 on a bean rally, but I think it's going to be very difficult. And this is old crop, so I think it's going to be very, very difficult. But to answer your question specifically, it's going to be bean led. Wheat could, as my partner Jared Cree says, wheat could do something stupid here. But I don't, looking at the balance sheets and everything that's come out, I mean, I think wheat is kind of a $5 commodity. So I'm not necessarily sure that wheat is going to be the one to pull everything else up.
mm-hmm.
Yeah.
What about the funds? You were just talking about the stock market too, and and potential for some sort of a market move. Are they just going to go to the sidelines if there is any issues on the stock market side of things? We get into the first part of the year or whatever. I get your point of, it's probably likely going to be pretty strong throughout the end of the year. But if we start seeing some pressure on the stock market, does any of that money move to the commodities, or is it pretty much go to the
No, it used to. No, it doesn't anymore. I mean, you'll probably
bring it over?
No, you'll probably
weather in South America or something, or some kind of,
not really.
really.
I mean, if yeah, and the oil market is just shit. I mean, the oil market's still trading below $60.
Mm-hmm.
For those of you that watch Landman, Billy, whatever his name is, Thornton said one time, he said the sweet spot's between 60 and 80. That's factually correct. And that's the sweet spot for everybody. So now that we're below $60, there's really not a lot of excitement about it. Your diesel prices are well above your gasoline prices just because it's that time of year when people are using heating oil to heat their homes as well. Natural gas prices are going to be susceptible to spikes here depending on the weather. So is there a real reason to put money into commodities at the moment? If the ag economists are right and we're in a recession and there's still a 65 or 70% chance that that's not going to change over the next year, nobody's going to step in here and buy. That being said, I don't think they're going to, they're short corn, so they're not going to press the corn market. Could they press the bean market? I don't know. In the grand scheme of things, unless you're a commodity only fund, chances are, the year end isn't going to matter where they mark the market.
Yeah. We're sort of stuck in this cycle like we were in, 10 years ago, right? It's like that, 14, 15, 16, 17, 18, it was different reasons,
right?
But, it just seemed like we couldn't get out of a kind of a fairly tight range in the grand scheme of things, for any hope to get to where you could be basically profitable or reasonably profitable, and instead of trying to tread water.
Well, I mean, I've said this before. I mean, you need to market your beans based on South America, not on U.S. seasonality, and you need to market your corn based on U.S. seasonality. Mm-hmm. Now, when you talk about U.S. seasonality, and we talked about the oil market a little bit, we can talk about ethanol here. Obviously, we have a current administration that is not pro renewable fuels, not pro sustainability. I mean, you were talking before about the farmers that say, yeah, it's great, whatever. Likely have other sources of income. Mm-hmm. I mean, as you know, Chris, my partner Jared and Mike Busing and Kelly Garrett were involved in the carbon side with consumer packaging good companies that are buying carbon credits from farmers. That market has just totally dried up. Mm-hmm. So nobody, and that was supplemental income. Okay, yeah, we were able to pay some farmers, six-figure checks, which is great. But that market's just dried up now with this, lack of any interest on the sustainable side or whatever. The only light at the end of the tunnel there is that might be some international interest in 2027, but we still have to get through 2026.
Yeah, for sure. I want one other thing, and then I want to ask on 26, and then we'll wrap things up. But we were talking about the funds, the stock market. There's a couple of other little factors in there that influence the market moves and stuff, and one of them is inflation, and the other one is how these interest rates adjust more so on does that help on lines of credit and that kind of stuff. What's your take on that from your years of experience? Do we have to see a pretty significant inflation rate? I mean, right now, what I'm seeing, just to give you our perspective, just my little cross section of the world with our producers, but we're still seeing about a 4% inflation. And where we see that is on the line item that we call return to management. And I would argue that a lot of our guys have done a good job of not taking that extra vacation, maybe not trading that truck this year and skipping a year or whatever it is. And we're still seeing that category increase in terms of how much they're spending in that line item, that return to management, which is essentially all the overhead expenses, which is part of the cost of production, because it's also payroll, it's paying themselves, it's all those things combined. What is the inflation? What is the real inflation rate? Any thoughts or perspective on that? And then do you think interest rates can be adjusted from where they're at all, in the next months and year ahead?
Well, I think that seems to be the argument between Jay Powell and the Federal Reserve Bank and President Trump. I mean, I saw that Secretary Bessent said last week that President Trump will announce his candidate for Fed chairman like before Christmas. I think he's trying to influence the market there. Now, the fact of the matter is that Jay Powell is not going anywhere, right? His term ends in May of 26. So here we have now a president who's going to announce his successor 6 months in advance to try to force the hand. The thing that I love about the Fed, I love and hate the Fed. The Fed, they're independent of politics. I mean, Trump has gone out and said that they should have lowered rates by 4 or 5%, 3-4% at the moment. They're not going to do that. The inflation rate, as you suggest, is a little bit too hot at the moment for them to be. The real rate of inflation is probably higher than what they're saying. I mean, certainly, all of a sudden 2 weeks ago or 3 weeks ago, he had the beef market on his radar, and then we're going to import Argentinian beef, and then all of a sudden Tyson announces the closing of a plant because there's not enough head of cattle to slaughter. You got this going on and that going on, and it's just that has not trickled down to the consumer yet. And let's be honest about it, farmers are consumers at the end of the day as well. To your point, they have to increase payroll, they have to increase what they pay themselves. Sometimes it's just to make ends meet on the grocery side. So I think we'll probably get a Christmas rate cut here, but I'd be surprised. I mean, it's certainly not going to be anything bigger than 0.5%. It's likely to be 25 basis points. Maybe we'll get to 50 basis points. Maybe we'll get to a half. But outside of that, I think that, with the government being shut down, that was obviously a big drag on the economy, on the U.S. economy, given how many people work for the government. Okay, they all got paid at the end of the day, but productivity went down. We saw what happened with the airlines. We saw what happened with the air traffic controllers, all the cancellations, I don't necessarily think that the economy is in as good a shape as the president seems to be portraying, or the Secretary of Treasury, Secretary Bessent for that matter. I mean, it's almost like they're trying to will the thing to be better. You know what I'm saying, Chris? I mean, there's not really a reality check. And when you just gave us a reality check on the 4% figure. So,
I keep hoping it's going to get better as we look at more data, but it's there. So I don't know what to say, but
with all due respect, hope is not a strategy, right? I mean, and that's the problem, is that I think that what we hear out of Washington is a lot of that hope as well. And it's like, they're trying to tell you that that the economy is better than it is. Well, I don't know. Grocery bills aren't going down. I
No.
mean, gasoline prices, okay, they're fine. Sub $3 for the most part, 2.50 to $3 in many places. But
Yeah. The thing that we've seen that is pretty sticky too are draws, whether it's the farmer, on their own payroll or their own draws and the expectations of family and the needs that are there and not being like, I haven't seen anybody be massively overspending, at least from what I've seen so far. And, and those things are sticky with employees. And we have a lot of guys that, when things were good, you tried to reward the employees and you pay a bonus or whatever. Those are sticky numbers. It's hard to not pay that again the next year.
right, once you set a
And
precedent, it's hard to go
yeah,
back.
yeah. And so it just seems like, it's just sticky. But
No, but to your point as well, you mentioned a little bit earlier about cash burn, right? So
mhm,
when there's a severe cash burn, as we've been seeing in a lot of operations, and we see the same thing as well, then there's no quote unquote free money, and
mhm,
I don't mean free in that it doesn't cost, but free as in excess capital that
mhm.
can be spent in other places.
Right,
So
right.
you talk about not buying a new truck or whatever. I mean, that's obviously up to your accountant for the most part, given the tax write-offs. But you start to look around and see these car dealer lots that are just full and full of pickup trucks and
Well,
all
and
sorts of
we're seeing some operations that don't need as many tax write-off as you might have seen a couple years ago too.
that. Yeah,
So,
okay, so that's fair.
yeah, so it's not like that is as nearly as big a concern as it has been. I
No,
want
that's fair.
I want to wrap up with 2026 and a little bit more positive mindset. When we start putting together 26, we look at crop rotation, we talk about that, we look at opportunities, we look at specialty crops, and those types of things and ways to, what are ways to do some things. And, I just tell people, as we look at your budget, let's look at what's controllable and what we can control versus what we can't control and try to put some of these numbers together, and be practical, but yet set some targets and let's do some reaching. For 2026, how far do we reach? We've had beans get well over $11. Our average client cost of production going into 26 right now on soybeans is like 1167 or something like that, or 1170.
Hmm.
On corn, it's about 465 ish. I'm within a couple pennies on both. So, what are those areas to start, or are there things we need to be watching on the, because we've been there. I mean, we're getting there. We're floating around there occasionally. Do we start there? Do we still sit on our hands, or what's Peter Meyer do with his farmer hat on?
Well, I think you're break even in the market, and we talk futures prices, and obviously the cash prices are totally different. But your break even in the market is going to be your first selling point, in my opinion, and you hope that it's your worst sell of the year. I'm not saying to go overboard, but I would certainly be selling 20 to 25% at break even if we got there. The acres are going to be interesting, but the acres, maybe we'll see something at the end of March with prospective plantings, even though those numbers are so bad. So, you got some time to wait here. But again, referencing that FAPRI survey, I mean, I was surprised to see that 40% thinks that the corn acre is going to be higher than 95 million again next year. That would be just bad. Another 40% thinks it's going to be between 93 and 95, and only 20% think it's going to be below 93. We could lose, in theory, we could lose 5 million acres. We should lose 5 million acres to soybeans, but, yeah,
Well,
it's still a lot of the economists, the biggest answer that got, I should say, the answer that got the most positive response was between 82 and 84.
for
If we
what
go,
amount? 82 and 84 for what?
for soybeans, million acres.
Okay.
So, if we only plant 82 to 84 million acres of beans, and by some stretch of the imagination, China does come in and buy 25 million metric tons of old crop, which has been promised to us by the administration, 12, 25, and 25. I think the numbers are, they get confusing after a while. You know, that would certainly lend itself to at least 12, maybe 12.50 beans, I would think. Maybe even $13 beans if they do come in to buy 25. But, but it certainly,
And that depends a little bit on a bunch of stuff, though, doesn't it? Like what happens to South America in the meantime,
correct.
how much they can supply, and what does our spring weather look like as it relates to planting intentions and then reality?
Yeah, I don't.
Because we're not seeing. I mean, right now, and again, we a hell of a lot smarter here by the time we get to March, when Shay and Andy and Joe and Jeremy get more data. But from the initial conversations and initial acre estimates or beginning of planning of crop rotation, we're seeing pretty steady, like not a lot of change, maybe a slight increase in soybean acres, but it's pretty subtle right now because everybody's really cautious about doing that.
But are those typical corn on corn acres, or those are just going to be the first time in a long time they go corn on corn?
We've got a few that have had corn on corn as an increase in the last couple of years that are considering maintaining that crop, corn.
So that yield will stay relatively steady. Go ahead.
Well, yeah, I mean, corn after the first year, you take your hit on year one.
Oh, yeah.
Year two, you don't take as much of a hit.
That's why I asked the question.
Yeah.
That's exactly why I asked the question.
And in some areas, you don't take much of a hit even on year one. It depends on the state you're in, too. I mean, there's areas where you don't take as much of a hit. I mean, it's just,
but there is a hit.
Smarter. Yeah. We'll be a lot smarter, though, I think, here in another couple months. But I was just kind of curious, and you answered the question that 25% makes Peter Meyer with his farmer hat feel comfortable if he's got 25% sold at or slightly above your break even.
Yep.
One more granular question in that, then it's pretty hard to sell that 25% in one chunk. So are you putting some targets out there, or putting some offers out there, and on corn and beans, where would you be placing those offers to try to get some, say, HTAs or hedging some stuff?
No, I think you have to put the offers
5% increments, wouldn't you? Or are you doing
that? Yeah, but you have to put the offers out there. That's really the problem, and we saw that. It's so odd, right? We saw that with corn after the November WASDE. For the 2 days before that, we traded back above 440. We traded 442, and then we actually had some stuff for sale in the cash market. It did get elected, and then we had other clients that kind of said, "Well, I'm going to watch it because now it looks like it's above 440," and then after the WASDE, it went straight down. So I think if that recent history proves that you have to put in the offers, you have to pay attention to where the basis is in your area and make those adjustments. But I think you have to put in the offers just in case. And back to your comment a little bit earlier about South American weather and this and that and what happens here in the spring. You've heard me say this 1,000 times, Chris. Production rallies are meant to be sold. Demand rallies are meant to be respected, and that's why if we get China into the soybean market, I will respect that rally and I will watch that rally closely. But I also know it could be a bit tedious in the fact that they could disappear. They've signed agreements with Argentina. They've signed agreements with Brazil. We'll have to see how that goes. But I think, you have to put the offers in. Mm-hmm. You have to.
Yeah, that's going to be my takeaway, I think, for me as a farmer. But I think hopefully everybody takes that to heart too, because we see that on profit manager side of things too, is those guys who are pre-selling with the offers out there, because it seems like a lot of times those things hit at night, or you got about 5 minutes for that market to hit, or you're distracted, right? I mean, we're all doing tons of other stuff, and a lot of us are not paying attention 24/7, or at least while the market's open 100% of the time. And so I think those offers have to be working. I would agree. That's my
No, they have to be working, but you also have to, watch the basis as well. A lot of times, and we saw that when it traded above 440 again, where the basis kind of weakened, and guys were in there and had orders sitting, and then went to talk to the elevator, and the elevator was like, well, the basis went down a little bit, so
you didn't gain anything.
right. So I think that also though speaks to the importance of having standing orders, and the market is liquid enough that you're gonna see a lot of interest at the psychological levels, right? The 450s, the 475s, the $5, obviously, even the 460 in beans. $11.75, $12. You're gonna see a lot of interest at those prices. So maybe play with it a little bit if you're going to, put in a decent chunk or a decent size order, a couple pennies either way. But yeah, I definitely don't think that there's enough in the market that would stop a market.
Yeah.
It's just psychological.
Yeah.
That's all.
I like your comment on the basis too. That's another takeaway for me, both on old crop and new crop. There's never, I shouldn't say never. It's extremely rare when making a cash sale is the right thing to do, because usually the day you need to be making the price, taking the price objective is not the day to lock the basis in.
Right.
And it feels like too, there's a lot of old crop out there that a lot of times around that Christmas time when nobody wants to truck. And I know I'm a broken record. I say that every year, but figure out how to get the trucks moving when nobody else wants to. And that usually pays pretty big dividends too. And
yeah, it sure does.
And the other thing too is the posted number versus some extra volume, and a conversation about, working with the processor, I think has a lot of value too. I think that's something that's really a big deal as well. So we had that conversation last week with Mark Welch about just building that relationship. I know a lot of producers feel like they can't get them to do anything on basis no matter what. Well, it sure as heck doesn't hurt to at least constantly work on that basis relationship with them and find out when they want grain and what you're doing and share with them.
Right. To your point as well, and you say about 5%, 5%, 5%, 5%. Sometimes when you offer these guys bigger chunks and they need it, they'll take them.
Yeah. And that's where
they'll improve their basis based on the size of your offer.
Right. And that's what I'm saying. You might sell your grain in 5% increments, but you might lock basis in on 25% increments.
Correct.
Whatever, that's the kind of the thought process, I guess. But
Mm-hmm.
I'm going to give you 60 seconds for the final word for the producers. But before I do that, I want to remind people about our conference. Technically, our conference sign up is supposed to be shut down, but we do have a few slots left. And so if you're watching this and you watched to the end of this conversation, that means you're probably one of the people that would get the most benefit out of coming to the conference, because you're paying attention, you're executive minded, and you're focused on the right things for your business. So if you made it to the end of this conversation and you're still listening and you haven't signed up, go on AgView Solutions website and check it out, because again, like I said, we have a few slots left. We have a phenomenal group of people. We have a phenomenal group of educators that are going to be there. And it's going to be an opportunity January 21st through the 24th to do some things actively from an education standpoint that will impact your bottom line. At AgView Solutions and with Pete and all the people that are going to be there helping you, we all care about you, and we all want your operations to be profitable in 2026, and we feel like you can be. But we got to do some of these extra things. We have to be investing in our businesses, and this is a perfect opportunity to invest in your business. So that's my sales pitch for coming. And like I said, we got a few slots left, so it's going to be kind of first come, first serve. We shut the door on people sign up at 150, and we're getting closer. But if you think you can make it, you want to make it, you can also give me a call. But jump on the AgView Solutions website, click on conference registration, and you can get registered. Pete, I'm going to give you 60 seconds with your final comments for what people need to be thinking about going forward.
Well, I'll start by saying that I know that I'm on the final panel of the final day. So if you need an excuse to get an early flight out, you can use me as as that excuse. Go for the first couple days, a
We're saving the best for last,
week
man.
before Friday afternoon. Well, if you're confused about the market, you're not alone. I think that the amount of noise that's out there is probably the highest that I've seen in a long period of time. So, it's good, it's bad, whatever. We talked extensively about leaving orders in. You never know when this noise is going to hit the market, and I think that the noise at the moment, any sort of noise that we hear, is probably going to be more on the positive side than it would be on the negative side. I really don't see a lot of downside for this stuff at the moment. So, as we look forward, I think the strategy would be to pick your spots. Nobody's going to be able to call a top here. I don't see the funds getting super bearish on this stuff, but I don't see them getting super bullish on it either. So it's really going to have to be a demand driven market, and China's going to be steering that truck. So leave the orders in. Be careful. There's a lot of noise out there. As I said, confusion reigns at the moment. We hear different things from Washington almost on a daily basis. It is confusing. It is sometimes depressing to listen to it, but at the end of the day, it'll all sort itself out. And the hope is obviously that we can keep the farm economy solvent until it gets sorted out.
Yeah. Well, I appreciate that. And I think, we have to have a positive outlook on 2026. I think the way you do that is get your numbers dialed in. I mean, if you get a hold of Pete, get a hold of us at AgView, get a hold of somebody and have another set of eyes on, this is my wrap up, but having another set of eyes on your numbers is always a good thing, just for some additional perspective. And even if it's a 15-minute Zoom call where you're kind of looking at things and looking at your plan, I think that has a lot of value. But anyway.
Yeah, one of the things you have to be very much aware of too are the subsidies that's coming into some of these endorsements for crop insurance. You cannot let that go. That's one way where the government is quote unquote paying you without paying you, right? It's almost an indirect payment. And in this day and age, I know it's expensive. I'm not saying that you just throw the money, at 85% coverage, whatever endorsement you can get, but you have to be cognizant of where the subsidies are and what that means to your operation.
Yeah, there's a huge safety blanket there, and we will be having some significant conversations on risk mitigation and those types of things here in the weeks and months ahead here. With that said, hey Pete, this has been a great conversation as usual. I knew it would be. Happy holidays and be safe during this December month. I'm sure we'll be getting you back here, especially as we get close to January and we start figuring out what's going on. But thanks again. Really appreciate your time.
Thank you.
You bet. And thanks everybody again for listening. If there's anything you guys need or whatever, be sure to reach out. This is the time of year where we can put some good information together on different topics and stuff. If you didn't get a chance, go back and listen to the last couple of podcasts we just did. What's up at AgView. And then we also did one with Andy Cage and Junkin on just navigating personal relationships with your business partners. And with that said, thanks everybody. We'll catch you again next time on the AgView Pitch.